Okay, I want to start today by putting you in a hypothetical
I
scenario.
like a good hypothetical.
But I need you to know that the numbers in this scenario are very, very real. They're pulled directly from the market reports we're analyzing today.
Ah, okay. The best kind.
So imagine you walk into a store in New York City, you buy a specific asset, let's call it a digital commodity, for $60,000.
Got it. 60K.
You put it in your pocket, head to JFK, and you fly 14 hours to Seoul, South Korea.
I have a feeling I know where this trip is going.
You land, you walk into a local exchange, and you sell that exact same asset, identical code, identical utility, but you sell it for $72,000.
Wow.
You haven't added any value, you haven't improved it, you just moved it across an ocean. And just like that, you've made a 20% profit.
That's a better return than most hedge funds make in an entire year, and you did it in a day.
Exactly. And, in standard economic theory, this shouldn't exist. Markets are supposed to be efficient.
Right. Arbitrage is supposed to fix these gaps almost instantly.
But what we're diving into today is this stubborn, multi-year economic glitch where that balance just refuses to happen. It's a phenomenon known as the kimchi premium.
And while the name sounds a bit cheeky, naming a financial anomaly after the national dish, the reality behind it is fascinatingly complex.
It really is. We've got a stack of sources here, from central bank reports to on-the-ground interviews, and they all point to one thing. This isn't just about cryptocurrency prices.
Well, this is all.
Right. The sources make it clear that this is actually a story about a closed economic loop, deep-seated cultural anxiety, and the absolutely wild lengths people will go to.
And we mean wild.
We're talking smuggling gold bars and carry-on luggage just to capture that 20% edge.
It's really a story about what happens when you try to, bolt the doors on a global market.
So our mission today is to unpack this premium. We're going to look at why it exists, who is trading it, and the cat and mouse game between the government and the people.
And I think it's important to say, if you're listening and you usually tune out when you hear crypto, stick with us.
Please do. This is way less about blockchain and much more about human psychology under pressure.
Agreed. To really get the kimchi premium, you don't need to understand the code. You just need to understand the asset's role. We are talking primarily about Bitcoin.
Which the sources variously describe as everything from magic internet money to digital gold or a speculative bubble.
All of which can be true, depending on who you ask. But for our purposes, the definition that matters is permissionless store of value.
Right. It runs on a blockchain, which is just a digital ledger. The key thing is that it's global, it's liquid, and typically it trades at the same price everywhere.
It's like a barrel of oil or an ounce of gold.
Except in South Korea.
Except in South Korea, where it trades at a massive markup.
So let's get into the mechanics of that, the anatomy of the premium, if you will.
Sure.
We have this gap, $60,000 globally versus $72,000 in Korea. My first question, and I think it's everyone's question, is why doesn't the free market just fix this?
That is the fundamental question. And the answer lies in something pretty specific to the South Korean economy: strict capital controls.
Okay, can you break that down? Because capital controls sounds like something out of a textbook.
It does, but it's simple. In the U.S., or most of Europe, money is fairly fluid. If you want to wire $1 million to a bank in Singapore to buy an asset, there's paperwork, but you can do it.
Right.
South Korea is different. The government restricts the flow of their currency, the won, out of the country. It's to maintain stability.
So you can't just wire massive amounts of cash abroad to buy Bitcoin on a cheaper exchange.
Exactly. If I'm a Korean trader, I see that Bitcoin is cheaper in the U.S., but I can't get my money out to buy it.
So you're stuck with whatever supply is already inside the country.
You got it. And because the demand for Bitcoin in Korea is explosive, which we'll get to, and the supply is constrained, well, prices skyrocket.
One of the analysts in our source material used a metaphor that I thought was perfect. They described the Korean market as a pressure cooker.
Or a 24-hour casino with the doors bolted shut.
That's the one. The image is so vivid. You have all these people inside, the chips are flying, the excitement is building.
But no new chips can come in from the outside. So the value of the chips inside just keeps inflating relative to the rest of the world.
That's basically it. The kimchi premium isn't really a bonus. It's more like a scarcity tax. It's the price you pay for trading inside a walled garden.
Okay, so that's the what and the why of the mechanic.
Right. But I want to pivot to the who, because when I think of crypto trading, I usually picture, a very specific demographic. Tech bros, finance guys.
And that is where the Korean market just completely defies the stereotype. The demographic analysis in these reports is staggering. It's not a niche subculture, it's everyone.
Everyone.
We are talking about college students, corporate salarymen, stay-at-home parents, grandmothers.
Wait, grandmothers.
Yes, older demographics who have never invested in stocks are managing crypto wallets. There's even a fascinating anecdote in one source about monks,
Monks. No way.
Buddhist monks trading on their smartphones in between temple duties.
That is a wild image. Seeking enlightenment and alpha at the same time.
But you have to ask yourself, why? Why is a grandmother or a monk stressing over the price of a volatile digital asset?
Yeah. What's the driver?
This brings us to a crucial cultural concept mentioned all over the analysis. Hell Joseon.
Hail Joseon. That sounds incredibly bleak. I know Joseon refers to the old Korean dynasty, right?
It does, yeah. The Joseon dynasty lasted for 5 centuries and was known for a very rigid class hierarchy. By calling modern Korea Hell Joseon, the younger generation is essentially saying, we're back in feudal times, the hierarchy is fixed, and there's no upward mobility.
That feels so contradictory to the image we have of South Korea from the outside. The miracle on the Han River. We see Samsung, K-pop, high-tech cities.
That's the shiny surface. But the sources highlight the economic reality underneath, specifically around real estate.
The housing market.
In Seoul, the price-to-income ratio is one of the highest in the world. For a young person starting their career today, the mathematical probability of buying an apartment just by saving their salary is, well, it's effectively zero.
So the traditional social contract, work hard, save money, buy a house, raise a family, it's broken.
It's completely severed. The sources argue that for many Koreans, crypto isn't viewed as an investment in the way a Westerner might buy an index fund. It is viewed as the only escape ladder.
Wow.
It's a lottery ticket, but one where the odds feel slightly better than the actual lottery.
That creates a very different psychological profile for a trader. It's not about retiring a bit earlier, it's desperation.
Precisely. And that desperation fuels the FOMO, the fear of missing out. The reports describe this massive social contagion. You're sitting at work, feeling hopeless about housing, and you see your coworker, who you know isn't some financial genius, suddenly make 2 years' salary in a week, trading some obscure altcoin.
Yeah, the sources mention people making fortunes on what they call shitcoins.
Yes, that is the technical term. Coins with no fundamental value, often just memes. But in a market driven by Hell Joseon desperation, fundamentals don't matter, only the price action.
It's just about the number going up.
People acting like real estate moguls purely off gains from coins that might disappear tomorrow.
So you have this high-pressure environment, a massive price gap. And as we know, nature abhors a vacuum. If there is a 20% profit just sitting there.
People are going to try to bridge that gap, laws or no laws. And this is where the story turns into a crime thriller.
Right, because you can't just wire the money out.
So arbitrage traders had to get creative. They had to get physical.
Let's talk about the gold scheme. That was the one that really stood out to me. Walk us through that step by step.
Okay, so it's incredibly labor intensive. Step 1. You are in Korea, you take your Korean won, and you buy physical gold bars.
Okay, easy enough. Now I have a backpack full of gold.
Step 2. You get on a plane, you fly to a place with free markets and no crypto capital controls. Hong Kong was a major hub for this.
Right.
You land, go to a gold dealer, and you sell the bullion for cash. Hong Kong dollars, US dollars.
So now I'm in Hong Kong with a bag full of cash.
Step 3. You use that cash to buy Bitcoin. And because you're in Hong Kong, you're buying it at the global price, the cheaper price.
And the beauty of Bitcoin is that I don't need to stuff it in my backpack to fly home.
Exactly. It's digital. You just send it over the internet to your digital wallet in Korea. You hop back on a plane, fly to Seoul, and sell that Bitcoin on a Korean exchange for the premium price.
You pocket the 20% difference minus your flight and fees. It sounds foolproof.
Except for the part where you're carrying gold bars through airport security.
Yeah. There's the catch.
The customs agents aren't blind. The sources describe these incredible busts where they'd stop people walking with a funny gait, open their carry-on, and find 50 gold bars wrapped in newspapers.
50 bars!
Yeah.
I get nervous bringing back a bottle of wine.
It just shows the level of motivation. And it wasn't just gold. People were flying to Dubai with literal suitcases full of cash. But the really sophisticated players, they used corporate shells.
This is the $3 billion man story, isn't it?
Yes. This case is just staggering. A ring used a paper company, a fake business, no employees, no product. They disguised their money transfers as payments for imports.
Like what?
Oh, they'd claim they were importing semiconductor parts or software licenses, things that are hard to physically verify.
Very clever.
They used these fake invoices to get the banks to wire the money out. This single entity moved $3 billion overseas just to play the kimchi premium.
$3 billion. That creates a massive hole in a country's capital reserves. It really explains why the government was so freaked out.
It was a systemic risk, and that pressure eventually forced the government's hand. Which brings us to the great crash of 2018.
I remember this. The Justice Minister, Park Sang-ki, basically dropped a nuclear bomb on the market.
He did. He came out at a press conference and just announced the government was preparing a bill to ban cryptocurrency trading entirely, to shut down the exchanges.
Wow. And the market reaction was?
A bloodbath, instantaneous. Prices fell 20% in a single hour. The kimchi premium briefly became a kimchi discount, just panic selling everywhere.
Well, what's really interesting is not the price, but the social reaction.
Yes. You mentioned earlier that for many people, crypto was their only ladder. So when the government tried to kick that ladder away...
They revolted.
Digitally, yes. A petition was launched on the website of the Blue House. That's the South Korean White House. If a petition gets enough signatures, the government has to respond.
And this one just blew up.
Over 200,000 signatures in a flash. And if you read the comments on that petition, the analysts provided translations, they are just heartbreaking.
What were people saying?
Things like, don't take away our dreams.
Yeah.
This is the only hope I have of ever buying a home. It wasn't about blockchain efficiency. It was an emotional plea.
Let me have this.
Exactly. And it totally shifted the narrative. The government realized that they weren't fighting greedy speculators. They were fighting a desperate generation. It turned a financial regulation issue into a political survival issue.
So they backed down.
They did. They realized that trying to ban it was like, as one source put it, trying to stop the tide with a broom.
So the market survives 2018, the premium persists, and then a couple of years later, the global pandemic hits.
If 2018 was the spark, COVID-19 was the gasoline. You have to remember, South Korea is arguably the most wired country on Earth.
Right. Everyone's online.
Now imagine locking that entire population in their small apartments. Bored, scared, and with no one to spend their money.
No travel, no dining out.
All that cash just flowed into the markets. The trading volume during the pandemic reached levels that are honestly hard to comprehend.
There was a statistic in the notes that I actually had to circle 3 times because I thought it had to be a typo.
It wasn't a typo.
There were days where the trading volume of cryptocurrencies in Korea was higher than the trading volume of the entire Korean stock exchange, the KOHSPI.
Just pause on that. More money was moving in Dogecoin and Bitcoin than in Samsung, Hyundai, LG, and KIA combined.
The side hustle became bigger than the main economy.
It wasn't a niche anymore. It was the main financial event of the nation.
Yeah.
And this kind of obsession, it creates its own mythology.
You're talking about the Korean Satoshi rumor.
Yes. This is a great example of national pride.
Yeah.
As you know, Satoshi Nakamoto is the anonymous creator of Bitcoin. No one knows who they are.
Still a mystery.
But in Korea, there is this persistent, low-level rumor that Satoshi might have a Korean connection.
Is there any evidence for that at all?
None. Zero. The sources say it's based entirely on logic and code and a vague feeling of, it feels like us. But the point isn't whether it's true. The point is that they want it to be true.
A kind of pinship with the technology.
Yeah. But that national pride can create blind spots. And we can't talk about Korea and crypto without talking about the king, the founder of Terra and Luna.
He was the superstar. The source calls him the king of the Koreans in the crypto space. He was young, a Stanford grad, arrogant, and wildly successful. He was proof that a Korean could dominate the global stage.
He created an ecosystem worth $40 billion.
And the fall was just spectacular.
Catastrophic.
Yeah.
In May 2022, the Terra Luna ecosystem collapsed. It went to zero in a matter of days. $40 billion just evaporated.
And because he was this local hero, the exposure in Korea must have been massive.
It was. A huge amount of that lost money belonged to regular Korean citizens. People lost their life savings. The stories were just absolute ruin. It was the dark side of the casino.
When the house catches fire.
Exactly. The people locked inside get burned the worst.
It's a tragedy. But here we are, years later, and despite all of that, the smuggling, the warnings, Duquan the kimchi premium still appears.
It fluctuates, sure. Sometimes it's 2%, sometimes it spikes back up, but the phenomenon hasn't gone away.
Why not?
Because the structural conditions remain. As long as those capital controls prevent easy arbitrage, that pressure cooker effect will continue. The premium is really just a measurement of the friction between a closed local economy and an open global asset.
It's almost like a thermometer for the country's economic anxiety.
That's a great way to put it. The source material synthesizes this beautifully. They argue we shouldn't just look at the kimchi premium as an inefficiency to be solved. We should see it as a symbol
A what?
of a people fighting a system they feel is rigged. The report describes the market that results from this as dangerous, beautiful, and incredible.
Dangerous, beautiful, and incredible.
It captures the duality perfectly, doesn't it?
Yeah.
It's dangerous because you can lose everything. It's beautiful because it represents hope and ingenuity. And it's incredible because of the sheer scale of the money and emotion involved.
It leaves us with a really fascinating philosophical question, doesn't it? About what price even is.
It really does.
We usually think of it as a fact. A gold bar is worth X. It's objective, but this story challenges that.
It asks, what is the real price? Is the real price of Bitcoin the global average you see on a screen in New York? Or is the real price what the most desperate buyer, the person trying to escape the Elojo's game, is willing to pay?
So value is just. It's relative to your need.
Precisely. If that digital asset represents your only chance at a future, your only shot at buying a home, it is worth a hell of a lot more to you than it is to a hedge fund manager on Wall Street.
That is definitely something to chew on. Next time you see a price tag, maybe take a second to wonder what that same item would cost if you were standing on the other side of an ocean or inside a closed loop.
Always worth a look.
Thanks for diving in with us. We'll see you on the next deep dive.